Welcome to Realcast, the weekly roundup of the real asset markets. I'm joined by Paul Strohm and Nicole Dines. Interesting, I thought, in the news this week was BT in the UK looking to cut 10,000 jobs because of AI. So interesting to see that kind of thing starting to come through into the news now, things we've talked about, particularly in terms of office. Nicole, what were some of the news stories you've been following?
It wasn't a particularly news-rich week, but there were some very interesting bits of research. INREV produced its Fund Manager Survey 2023, and the latest research shows that 81% of last year's total assets under management were concentrated in the hands of the top 10 fund managers. So that's a trend that we've been seeing for a while, but it seems to be strengthening. The total assets under management of the top 10 fund managers globally exceeded 1.8 trillion, which was up from the year before. And each manager now sort of reached 32.8 billion, which is another record. So at a global level, assets under management have gone up. Iryna Pylypchuk, the Director of Research and Market Information at INREV, said that there are vast quantities of dry powder which could trigger a very quick turnaround in capital deployment. And the value of dry powder now stands at a staggering 215 billion euros, mostly concentrated, as I was saying, in the hands of the top managers. The top three worldwide are Blackstone, Brookfield and Prologis, and in Europe is AXA IM, Swiss Life and Blackstone again. It just shows that things could turn around very quickly with all this dry powder available. Another interesting bit of research, more specific on the office sector, was by DWS. They said that it's a period of transition for the office sector, as we know, but they strongly believe that it will come back in a big way. And particularly, they think there are significant opportunities to be found in the right markets in sort of refurbishing old assets which are in the right locations to turn them into ESG compliant offices, which we talked about before. This sort of wish for sustainability is very much across the European countries. They believe a redevelopment strategy is very well advised, and they've identified the top 7 markets which they believe would be the best for this redevelopment strategy because they attract a lot of employees, especially young professionals, good quality of life and so on. They call them strategic primary targets for office refurbishment, and there are not many surprises there. The top 7 are London, Paris, Munich, Berlin, Amsterdam, Stockholm and Madrid. And they also identify further 7 cities which they say they're classified as strong tactical target markets, provided some more repricing happens. So at the right price, then it would be worthwhile having this strategy. And then Milan, Dublin, Copenhagen, Barcelona, Edinburgh, Frankfurt and Hamburg. So those are the sort of 14 cities Europe-wide. But what's really interesting, apart from the cities, this strategy, they think the best way to have a strategy in offices now is to turn them into ESG compliant offices. So very much a refurbishment story, which we talked about a lot. And on the news front, CTP, the specialist in warehouses and business parks, announced that it's investing 600 billion euros in Germany and Poland. There are 2 markets where the group already has a strong presence, but it wants to strengthen it further. And Raymond Voss, the CEO of CTP, said that they believe there's a huge potential for further growth in the logistics sector in those countries. The 600 million will be invested in a mix of new build and acquisitions. And it's a sort of real vote of confidence in the whole logistics sector by CTP, because they're also planning to double the size of their pan-European portfolio to 20 million square meters from the 10.9 they have now. And they plan to generate 1 billion euros in rental values every year. So, as I say, very much a vote of confidence in logistics.
That's interesting to see. There were also some in terms of the interviews. I did an interview with Stefano Fasolo from GLP talking about renewable energy plans. That's going to be one which we picked up obviously at Transport and Logistics last week. That's going to be a real key driver, I think, for markets going forward. Paul, what have you been tracking?
Well, again, quite a lot on logistics this week, and we've reported on Real Asset Media's logistics real estate briefing at Transport Logistics in Munich. Cushman & Wakefield Logistics and Industrial Research Head Sally Brewer said that although the logistics real estate market in Europe has seen demand faltering in the last few months, following a period during which levels, as we know, were extraordinarily high, we're starting to see the early signs of business confidence returning. And a halt to the slide. Demand hit 46 million square meters in the 12 months to the end of June 2022. And as we know, it's spurred on by the post-pandemic recovery, particularly by e-commerce related demand. However, demand slowed in the 12 months to the end of March 2023, down to 37 million square meters, so 19% off that mid-2022 peak. But Brewer said we're starting to see the early signs of the green shoots of business confidence returning, and therefore we'll start to see the market arresting its fall and starting to correct as we come to the end of 2023 and the beginning of next year. Also in the logistics area and revealing similar optimism about the sector, UK Industrial and Logistics REIT SEGRO said it'll invest 2 billion in the development of net zero warehouse facilities in the UK's West Midlands region over the next decade, and it'll be a strategic partner to the West Midlands Combined Authority. SEGRO said that it aims to develop 13.5 million square feet, that's 1.25 million square meters, of sustainable tech-enabled logistics facilities, purpose-built research and development, and light manufacturing facilities. The WMCA, which is led by West Midlands Mayor Andy Street, was set up to improve the region's economy by investing in collaboration with partners, and it functions alongside local councils. The plans are expected to create up to 14,000 jobs, and SEGRO will prioritise brownfield sites for development and provide a mix of warehousing types. The plan includes the already announced development of SEGRO Park Coventry, which is a 450-acre site where there's consent for 3.7 million square feet of industrial buildings and warehouses. So that's quite a chunk of the target there. And in a different sector, but staying with the UK, a Knight Frank report reveals that in 2022, UK healthcare bed numbers actually fell, and the number of new homes completed dipped by 15%. Obviously, demand for beds in the sector has not diminished, and there is an expected shortfall of more than 200,000 beds by 2050. The report found that much of the UK market comprises older converted stock, and in some cases, in other cases, that's considered obsolete, and much of that is because of the lack of adequate bathroom facilities. On the bright side, the firm said that's an opportunity to repurpose and reposition the current supply region.
Yeah, I think the healthcare and senior living, residential, affordable housing side is going to be an absolute key driver for a lot of the markets moving forward, and a very big focus just because of the demographics. We'll be doing alongside the SHHA and EPRA a special session in Brussels on that, connecting also with the European Union, because it's a big focus for Europe overall. Interestingly as well, you mentioned there some of the UK mayors. I was at UK REEF, which looks at real estate and infrastructure. Big event in Leeds, looking at the UK markets. But again, the focus very much there on residential. So interesting to see a lot of the cities and regions there featured, and a lot of real connection there, both with government and local government, to try to drive forward areas, especially like sustainability and new energy. Also spoke to Aberdeen there as part of the Scottish Cities Alliance, with their big focus around new energy. Picking up on that theme of cities, we also launched this week in Real Asset Insight, a new publication called Real FDI, alongside Courtney Finger, and that's very much focused on the cities, the regions, the countries, and the investment into real estate, but also infrastructure, and particularly focused around that area of sustainability and new energy as well. Thank you, Nicole. Thank you, Paul. Thank you for joining us, and look forward to seeing you next week for our regular roundup of the real asset markets.